Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Friday, February 3rd at 5:57 p.m. here in Northern California. What we're going to look at today in the charts is the fact that the DXY, which is the US dollar index, has broken out bullish as expected. I actually put out a short the day before yesterday in which I said that I expect the DXY to break bullish and I expect it to rally for a while the crypto market pulls back, as well as the stock market. We're going to look at a case for that today, and we're going to look at a case for what this means for the market over the next 6 months or so. So let us jump right into these charts. Actually, we're going to start with Bitcoin, and what we're going to review again is the fact that Bitcoin was in this huge falling wedge on the weekly chart, which is inherently bearish but eventually bullish, and sure enough, man, the last month has been crazy as we broke above not only one, not only two, not only three, but four crazy lines of resistance that Bitcoin just exploded through. I mean, it's absolutely amazing. It's absolutely wonderful, and it would be wonderful if this is the beginning of the new bull market. And for all intents and purposes, it could be. But what we'd have to do is we'd have to break this 25,000 number, and it has to become support. And if that happens, then yeah, I'd say perhaps the new bull run is upon us, perhaps. However, there's something very important that we got to take a look at. Now, in previous videos, I talked about the inverse correlation between the DXY, which is the US dollar index, and all asset markets, specifically including Bitcoin and the crypto market and the stock market. And what we're seeing, really the point is that the US dollar and assets cannot both go up together. If the US dollar goes up, then assets come down. If the US dollar goes down, then assets go up. And so you cannot see a breakout in the US dollar index, because a breakout in the US dollar index means that money has become more expensive. The value of cash, of US dollars, has become higher. Well, that by its very nature devalues all of the assets. It means that the value of US dollars has increased in relation to assets, right? Assets and commodities. Now, here we're seeing that the US dollar was in a steep falling wedge. And when I made my video, it was here 2 days ago. Actually, I made my video here, and boom, it came down and tested the bottom of the wedge, and boom, it exploded above the wedge. Now, this is the daily chart, and if we come back and maybe back test this level here and then make our way up, that will be a nice rally for the US dollar. That rally for the US dollar will mean a temporary pullback for the crypto market. Looking at the weekly chart of the DXY, which is the US dollar index, there's something interesting that I want you to see. Number one, we've hit a very important level of support that goes back all the way to 2016, end of 2016, beginning of 2017. That was a line of resistance there. We came back and tested it again here in April of 2020. We've broken above it, and now we're back testing it. We came and tested the top of this trend. This trend line we established all the way back in February of 2009, and we've been in this bull trend ever since on the US dollar. We tested the top of the trend, and now we've pulled back and we're retesting this, or back testing this line of resistance that we broke. It's now a line of support. So the question is, are we going to break down beneath that line of support and continue to come down and test the bottom of this line? Or are we going to break out? Well, what's interesting to me is that the RSI has already hit the bottom of the trend and bounced. So every time the RSI bounced at the bottom of the trend, the price was getting ready to bounce as well. When the RSI comes to the bottom of the trend and bounces, the price is ready to bounce as well. Now, that doesn't mean that the RSI can't come up and come back down and test it again, as it did in both of these areas. But what we're seeing is that there's not much room in the RSI to break any lower. Now, it doesn't mean that we're not breaking lower. It just means we're probably not. In my opinion, we are probably not going to break lower. Secondly, from an Elliott Waves perspective, we could be looking at something like this, where we top it off here at one more swipe at the top of this range, and then we get a nice ABC correction, something like A, B, C, or C could even go lower, something like that. Something like that. I'd have to do the calculations. I'd have to pull the Fibonacci up to make it more specific. But the concept is we could be looking at one more run up at the top of this line, one more kind of bullish move for the US dollar index before it ultimately breaks down. And if that's the case, then the top of the US dollar index will be the bottom of the crypto market and the stock market as well. Now, jumping over to Bitcoin, I want to kind of show you something here on this chart. I'm going to pull up the RSI. This is a weekly chart. I've shown you this before, but I'm going to show it to you again because I think it's important. This is how I set up my particular RSI. All right. Now, actually, I don't need the SMA right now. Just looking at the RSI, this is the interesting thing to me. The RSI on the weekly chart topped out on January 4th, 2021. But the price didn't top out until November 8th, 2021. So from the topping out of the RSI to the topping out of the price was 308 days. So we had 308 days of bearish divergence in the RSI on the weekly chart before the price finally topped out. 308 days. And in that 308 days, there was a fake out. And what was the fake out? The price came all the way up, topped out, and you're like, this is it. I mean, look at the bearish divergence. The bearish divergence is so strong, we got to break down. And sure enough, we broke down, and then all of a sudden we break back above it, and now we top out. So we top out in the RSI, we have a fake top out in the price, a strong pullback, and then another breakout before we finally hit the top, okay? Now, here's the bottom of the RSI here. What if it takes us 308 days to actually hit the bottom of the price? That would put the bottom of the crypto market here, okay? Now, if I throw a line there so we can kind of get a feel for what that looks like, that's not until May 1st, 2023. And what if we're doing another one of these things and we come up again only to drop, right? Let me see if I can draw that a little better. What if this is another fake out and then we come down to the bottom and drop? And who knows how far down Bitcoin could go. I mean, it could go down to 13,000. In other words, what if we get a rally that takes us up and everybody's thinking, this is the next bull run, this is the next bull run, and then boom, it just collapses again. I'm not saying that's going to happen, but I'm saying that could happen. I mean, of course, anything always could happen. But what I'm saying is that the fact that you're saying that the RSI bottomed out on the weekly chart does not mean that the price has ultimately bottomed out. And my thesis is that we have not seen the bottom of the crypto market, and I'll show you exactly why. Because when we hit this bottom here, there was no volume. No volume, meaning there was no money waiting there to buy up the Bitcoin at the bottom. You see what happened with this bottom here in 2020, March of 2020? Huge volume, and the sign of that huge volume was when we touched that bottom, boom, there's this automatic rally. I mean, within a week, we were up 85, and within like 3 months, we were up 175%, right? So we hit bottom here, you know, and like 2 months later, We haven't even made 17%, 17% in 2 months, and now we've made a climb, we're up 53%, but it's in the same time period that we did 175%, 84 days. It's taken us that same amount of time to do 54%, or 52%. Now, so every time you have a localized Bitcoin bottom, you see a big green bullish volume bar the very next week. Now, you look at this bottom here. The green volume bar the very next week was bigger than the bearish volume bar the previous week. And so the very next week, we go from the bottom, like up 30% in a week, right? Up 30% in a week. So that automatic rally that you see, we didn't see that. We didn't see that. We hit bottom and we stayed there. We just hung out there because there was no real money there. Now, to me, it doesn't make any sense that the big money is going to come in 56% above the bottom. It just does not make any sense to me that the big money's coming in and we're already 55% above the bottom. I wouldn't do that if I were the big money. The big money does not function like that. The big money, if the big money wants to come in, it finds a way to crash the market so that it can buy it at the very bottom. And so I'm going to interact with this market cautiously, and I am going to keep my mind and heart aware and open to the possibility that there can be some type of devastating news to hit the market in the next few months. That's really all coordinated. It's all coordinated. And the whole point of it is to take the market again so that the bears can buy it at the bottom. In the meantime, I will be trading with my Patreon community. And the thing I love about trading is that whether the market goes up or whether the market goes down, we can still make money. And that's really what I'm looking at in the days to come. All right. Remember, this is not financial advice. I'm not a financial advisor. My opinions only. Do your own research and make your own decisions. But more than anything else, please make it your aim to sleep in peace every night, wake in joy every morning, and walk in love every day. This is Cryptogenic, signing out.